All right, it's 6:05, so let's get started. Hopefully everyone can hear me okay. Hear me? Okay, wonderful. Thank you so much, everyone, for joining us this evening. It's really such an exciting time for us to be able to have our kickoff forum on our on our economic power and sustainability platform. So thank you so much for joining us. My name is Celia Johnston Blue, and welcome. As we recognize Black History Month, I'd be remiss if I didn't just say a few things about Black History Month. And so I thought tonight I would talk about what that means for me. It means a time of reflection. It means a time of assessing where I am and what am I doing to help to make a difference in this fight for equity, inclusion, and a just world. It means a time of honoring those who came before us, who sacrificed so much, their lives, to make our paths a bit easier. And we stand on their shoulders to continue the important work of advocating for a world where, as Martin Luther King said when he was talking about his dream for his 4 children, be one day we would live in a world where we're not judged by the color of our skin. And since we're not there yet, and there the work continues, this is why MAWOCC was established. Our vision is around ensuring that the Commonwealth has authentic inclusion, where racism and sexism no longer dictates the outcomes for women of color and our communities of color. Our mission is focused on eradicating racial inequities that exist for women of color that are created by structural, institutional, interpersonal, internalized racism. And we're doing that work addressing racial inequities on 5 platforms: our political and civic leadership, education, justice, economic power and sustainability, criminal justice, and health and wellness. We're focused as a board on 3 of the platforms over the next 12 to 18 months, and that is economic power and sustainability, which we're excited about the forum tonight, political and civic leadership, and health and wellness. Our core values are valuing each other, leadership, truth, self-care, and sustainability. And we believe that love is central in everything that we do and is woven into our work. With respect to our economic platform, our goal is around eliminating the wealth gap for women of colors in our communities of color through access, education, and opportunities. We're providing education and training on financial literacy, asset and wealth building, home ownership, and awareness of equal pay rights, which is so important because we're still way behind, and to launch our Women of Color business initiatives. And so tonight we have Fidelity Bank. Sheila is just such a strong supporter of MAWOCC, and I will introduce her in a moment. But our goal is, one of the things that we want to do is partner with other organizations and institutions that actually have this expertise to help to bring to you, to help you as you navigate the world of this world we live in, and where, money management is so important. Credit is also so important, and really learning some of the tools and strategies to be able to ultimately, gain more knowledge and to be able to work towards eliminating the wealth cap that we know exists hugely today for us. And one of the things we're also working on is wage transparency legislation, which is very important in terms of businesses, making sure that your salary ranges for positions, when you're promoted what those ranges are, and you as an employee can ask about the ranges of those positions. That will help us towards transparency so that we can further understand when we get in these positions what they really pay, and to make sure we are getting our fair share of what our salaries should look like. So more to come there, but tonight I'm going to introduce you to the key facilitator that is facilitating this forum for us tonight. Sheila King-Goodwin of Worcester is the Senior Vice President and Chief Community Banking Officer at Fidelity Bank. She joined Fidelity Bank in August of 2019. And she has in-depth experience in progressive retail banking leadership positions for mutual and stock banks, including Bank Boston, Fleet Bank, Citizens Bank, and most recently at People's Bank. King-Goodwin leads Fidelity Bank's efforts in community banking, client care, and investment in insurance. Fidelity Bank is a state-chartered, mutually owned financial institution with assets of approximately $1.4 billion, folks. In addition, Sheila is the Inclusion and Diversity Advisory Board chairperson and is responsible for creating programs to foster inclusion, equity, and diversity both within the bank and in the community. King-Goodwin is a graduate of the University of South Carolina, with a Bachelor of Arts degree, Assumption College, the MBA, and the University of Pennsylvania Stonier School of Banking. She lives in Worcester with her family and is active in the local community with the YWCA of Central Mass, United Ways Women's Initiative, E for All, Massachusetts Women of Color Coalition, and Massachusetts Bankers Diversity and Inclusion Council. And as I said earlier, Sheila has been such a strong supporter of MAWOCC. We can always count on her. She raises her hands and said, yes, I'm ready to help, and has worked with me throughout in creating this framework for us. So it gives me great pleasure to introduce you all to Sheila, and she has an inspiring story that I can't wait for you to hear. Take it away, Sheila.
Awesome. Thank you so much, Celia. It is a pleasure to just share my insights tonight. And it is my goal to make sure that we are very interactive. So if you have questions throughout my talk, please make sure that you're entering it in the chat, because I want to make sure that I am meeting your expectations, because as you all know, we're all on this financial journey together. And no matter where you are and what stage of life you're in, what your income or where you find yourselves, making sure that you're able to manage your money and build your wealth is something that is a day-to-day constant battle. So I'm here this evening to give you just some tips and suggestions in terms of what I've seen over my 34 years in banking. And I actually am very fortunate to work for a company that really believes in partnering with organizations like MAWOCC. And so it has been an absolute pleasure in working with Celia in putting this together. You know, one of the things Celia talked to me about was, you know, how can we make sure that her members have the financial tools that you need to be successful. And that really aligns with my organization in terms of making sure that our communities have the resources and tools that they need to be economically empowered, to grow and sustain both now and into the future. So partnering with organizations like MAWOCC is absolutely what our mission is. And so we're really hoping that this first session will be first of many, and making sure that we help our members, our communities move forward with confidence and clarity. So I appreciate your time tonight. Very quickly, you're going to find that we're going to cover, you know, and I always think that you start with, how am I able to make money and build wealth? So we're going to start with, you know, the importance of your career choice. We're going to also talk about budgeting and the power of budgeting, you know, how to build wealth and the power of credit. And most of us don't realize the power of credit until that credit does not fall in line with something that you're trying to do. So making sure that you're understanding what your numbers mean, how can we improve it, where do they come from? So those are some of the key factors that we're going to talk about tonight. So again, I encourage you, please put your questions in the chat, because I want to make sure that I'm covering all of your questions. And I cannot start any financial literacy discussion without sharing my own journey, because we don't come out of the womb automatically knowing everything about money management and budgeting. So I want to share with you, my story. As I went into college, I was that student that took advantage of all of the free credit card offers that you can find as a student. I graduated from college with student loan debt with a 10-year payback. I actually started my career in banking as a management trainee. So unlike what I'm going to suggest to you, I fell into a career that really suited my skills and stayed in that career for 34 years, and it has served me well. But I did not go to college to be a banker, but I fell into it and I found my calling. So again, I'm going to talk a little bit about how to not do it the way I did it, but making sure that you understand kind of where I started my career. Management training program. When I was working in my early career, my salary was covering just my two kids' daycare costs. But I kept plowing through and gaining that experience so that as I gained that experience in years in banking, slowly but surely, I started to advance and make more money where it was something that I could see my way clear. So again, as everybody is in their own journeys, I'm just sharing with you my own personal journey. Many of us come to a point where we are paying for rent and we have that discussion. Is it better to rent or is it better to buy a home? Early in my career, we decided to buy a home. I joined an organization that did tuition reimbursement. So as you're thinking about advancing your career and making sure that you can be your best self, I took advantage of tuition reimbursement in order to gain my MBA. Again, helping to build my family's wealth and my ability to provide for my family. And then the fact that I stayed in banking for the entirety of my career has really made a difference for me because my experience is that I am not going from different career paths to career paths. So again, I made a ton of mistakes and probably still continue to do so, but I wanted to share my story, my choices, because a lot of what we're going to hear about from a budgeting perspective is the choices that we make also impact our income. It impacts, our expenses. It impacts the wealth that we leave and we garner for our family. So I just wanted to share that with you. And of course, I love sharing pictures of my own family. So I just wanted to share that with you. So when we talk about your career choices, I would be remiss to not talk about the importance of making a choice to start your career with something that fits your skill set, something that you are passionate about. This is something, if you start working in your 20s, you're likely going to be working. Now, I'm on the other side of that. I've worked for 34 years, but if you're in your 20s, you're going to be working 40 plus years. So making sure that when you select a career, that it's something that fits your skills. And you might say, well, Sheila, how do I know what that is? As you start to learn a little bit more about what you're great at, it might be you're great with numbers, or you easily connect with people, or you have a passion for social work, making sure that you're listening to those pieces, because that will then drive where you might see your career. And then if you have questions, what we have today that we didn't have when I was younger is the value of the internet. So you can go online and look at all of the different job descriptions on Indeed and all of these other career builder sites, and you'll be able to see what the competencies are on those jobs to match that with your skill set. So I always start with find your niche. What are your skills that you are really strong at? Because if you're strong at those skills, You're going to advance in your career. You're going to love what you're doing. That's going to really resound within your organization. It's probably going to get you promoted and get you even more income for what you're looking to do in terms of growing your wealth. So as I mentioned, really that career choice is super important, making sure it matches you, matches your skills. Now you can also look at what that salary is. In the world of the internet, you can go on salary.com or Glassdoor, or even look in Indeed, and you can see what the salary ranges are for those jobs that you are most interested in. So whereas before, that piece was a little, you really didn't know before, but now you can take a real educated, assumption based upon if you're new in your career or you have multiple years of experience. It gives you the opportunity to look at what your income potential might be. So I always encourage people to make sure you know your worth, you know what that salary, what that position calls for salary. And then also, as you're looking at all of the factors of building your wealth, the cost of healthcare. So when you choose an organization, do they offer healthcare benefits? Do they offer a 401k or a pension plan? I don't know how many people already know what a 401k or a pension plan is, but many companies offer a way that you can save a portion of your salary towards your retirement. Many companies will provide a company match. So as you're looking for organizations, look for those types of benefits. That helps you because they're helping you build wealth, especially if they are doing a 5% match or a 10% match, whatever that is. So I always tell people, look for that. I always talk to folks about when you're looking at a job, do they offer bonuses? So many jobs will do a quarterly bonus or an annual bonus based upon your contributions to the organization, based upon your goal achievement. So as you're looking at building wealth, look and understand whether the particular positions that you're doing, whether they offer a bonus potential. And now with the value of COVID, we also are seeing a lot of people that are working from home, which also saves you money, which also adds a lot more work-life balance. But look at whether your companies that you're interested in, whether they offer a hybrid or remote option. And then I always talk about tuition reimbursement. Again, that is how I obtained my MBA, which I would say many companies, and I would say in banking in particular, as long as you're working part-time, they do give you some type of tuition assistance. And then some companies offer stock programs. So some will have stock options. So again, it all circles back on what's the right career choice that fits what you're looking to do. And then all of these different factors goes into, how are you able to build your wealth based upon the choices that you're making from a career perspective. I always like to pull out, just for your review, when you go on Glassdoor or salary.com, they will show you just plug in the name or the position type that you're interested in, and it will pull up a wealth of information in terms of what the annual salary is based upon your years of experience or your education level. They'll tell you your monthly gross salary, and it will even go down and say, okay, your net salary, which is your take-home pay, what will your net salary likely be? Again, for folks newer in their career, I know for my kids in particular, when they first got their first position, they were really surprised at who FICA is and what kind of taxes come out of your paycheck. So making sure that you're understanding that piece, you can go right in several solutions online and see where that falls. In terms of personal finances, I always too make sure that you're looking at your withholdings. So for some people, you like to withhold at zero, which means that they take out more taxes in your pay, but then at the end of the year, you may likely get it back. But if you need more of your income, then you would be disclosing a withholding of 1 or 2, depending upon you wanted to have more money in your paycheck, and then you may or may not have to pay that back when you do your taxes. So I always say, make sure you're looking at your withholdings so that you are withholding correctly for your particular need. I cannot say enough about saving. My father-in-law would say, it's not what you make, but what you save. So even if you're saving small amounts on a weekly, bi-weekly, monthly basis, it's really important that you pay yourself first, because there is always going to be something that is going to pop up that you need, that is going to help you get to where you want to be. Another piece we don't talk a lot about is estate planning. And I am a huge fan of estate planning. And really, when you hear it, most people think you have to be super wealthy to do an estate plan. And that is so not true. In doing an estate plan, this is really your way to document what your wishes are in terms of, especially if you have a family, if you have younger children, this is your way to really specify what you want in terms of wishes for your children, how you want to protect your assets and bring your assets to your kids at certain ages. So if you have not already and you have a family, or even if you don't, I would encourage you to talk to someone about estate planning, because many times, especially people with color, people of color, don't always have an estate plan or anything in writing in terms of if something happens to you, what your wishes are. So, and that to me all goes to how you're building wealth and transferring it to your family. Now I go back to, the lifestyle choices. I run a youth program for young ladies, and we always talk about my favorite thing is budgeting and taking people through all of the choices that we make that impact our monthly budget. So when you're looking at housing costs, are you buying a home? Are you renting? Are you getting a roommate in order to share the cost? That again helps you build wealth, especially if you are sharing the cost of an apartment. Utility costs. I don't know if anyone else has noticed, but our utility costs have skyrocketed, but looking at your bill and making sure that if there are other local vendors that you can go through to save on your costs, making sure that you're looking at the small things. And what you'll notice with my presentation, all of these are very common sense things that we can do as a people. It's not rocket science, but it is those little things that will add up, that will help us build wealth. So looking at your utility costs, making decisions on whether, now I love to eat out, so whether you're gonna, buy groceries, whether you're gonna eat out, what is your clothing expense, entertainment, transportation, do you live in a city where you can take public transportation, or is it better for you to drive a car if you're in more rural locations? Looking at your debt, student loan debt, how you're saving, all of those lifestyle choices really play a factor into your savings. And I'll tell a quick story. In my youth program, my students usually start out really, they're going gangbusters. They're going to live in an apartment by themselves. They're going to buy a car. And by the time we get down to their budget, they are eating beanie weenies and they are trying to figure out how to make ends meet. So it is those lifestyle choices that we make every day that really impact our ability to grow and build our wealth. Again, not anything that's rocket science, but really just calling out some of the choices that we make and how it impacts us. In front of you, you'll see just a real easy sample budget. And what I did was I took what the net monthly salary would be for an accountant. And that salary would be $3,600 in a month. And you look at, okay, Sheila, what are those expenses that go into our day-to-day? So what I did was I chose to have a roommate. So my housing allowance is $950 because I am splitting the rent with a roommate. I have household expenses because I bought some furniture, because I want to make sure that my place looks nice, so that I'm allotting $200 per month. You could see what I've allotted for utilities, food, eating out, clothes. You can notice that in my lifestyle choice, I'm living downtown. So I'm going to walk to work or take public transportation. So I did not budget anything for a car. In my particular situation, I also chose to spend $200 on my cell phone, internet, and TV. Again, all of these things are just lifestyle choices that we make that impact, what our wealth will be after we finish our paycheck. I chose my expense to pay back my student loans is $200 per month. You could see my healthcare costs because you have to make sure that you have healthcare. I budgeted high at $250, and then I'm going to give back, and I'm going to save $250 per month to make sure that I am building a savings nest egg. With all of those choices, it leaves me as an accountant for the month with $318. So again, it's not rocket science, but it's all of those decisions that we make that make a difference. So again, you can take, any simple budget. Really, all this is an Excel spreadsheet with, with your salary at the top, with the expenses at the bottom. I really do encourage you, if you have not, because you might find it helpful to know where you're spending your money. You might be surprised. I recently looked, I won't tell you how much money I spend on food and eating out, but that's my indulgence that I give to myself. So I have to tweak a few other things in order to make that happen. So again, making sure that as you're making those choices, you understand what the ramifications of those choices are. And then in terms of talking about your earning power, again, I'll go back to making sure you're doing your budget. I don't touch a lot on this, and I believe we're going to address this in an investment basics session with MAWOCC, but I cannot say enough about starting early in investing in your retirement. If your company has a 401k, or even if you want to open up an individual retirement account, it is extremely important to start early. And I'll use this as an example. If you invest and you start at 20 and you invest for 45 years and you put in, say you put in $4,500 a year, that's probably less than $200 a month. With an annual return of 4%, you're going to have about $1 million by the time you retire. So again, the annual rate of return of 4%, you're saving $4,500 a year. And that could even be lower if you find a company that does a company match. Because if they do a company match, then your aspect of the savings is even lower. But over that 45-year time span, you will have saved $1 million. So again, it is not, it's the small things that add up. But if you start, the earlier you start, the better you will find yourself at the end of your career. So I just wanted to make sure I know we're not going to focus on that tonight, but I definitely wanted to make sure I call that out. Also, other strategies for building wealth is talking about maintaining good credit. And I said earlier, many times you don't know you don't have good credit until you're looking to get something with credit. So making sure you know what that is. And we're going to go into a little bit more detail of that this evening. If you have credit, there's different modes of thinking. You might be an individual that likes to pay off their small credits first. And then as you pay off one credit that you're paying at $50 a month, you pay that off and then you add that on to the next. Or then I have other strategists that say, pay your big ones off first. That way you take that big chunk and then you can pay off the next. It does not matter your strategy. Just pick what fits with where you're trying to go. But again, making sure that you're paying more than that minimum payment, because if anyone's ever looked at your credit card statement, and it will say, if you pay the minimum payment over the next, it's going to take you 6 years. It's going to take you 12 years to pay this off. Make sure that you're reading that, because you want to pay those off as soon as possible, because that also gives you more opportunity and more income to build your wealth. Again, I talked about the company match. You know, there are buy now, pay later programs. So instead of using credit, you can do this buy now, pay later program. And I believe it squares it over four payment periods, where it allows you not to use credit, but allows you to budget it so that you can pay it off within a certain period of time. I am a fan of that, whatever helps you get to where you need to be. I'm definitely a fan of, an emergency fund. And for many people, not me, it's tax refund season. So many people earmark their tax returns for entertainment or fun. Make sure as you're looking at that, maybe that goes to, buying down your credit cards, or maybe it goes to putting money in your nest egg. So making sure that you're taking advantage of every opportunity where you have disposable cash at your discretion. So again, I talked about that. My favorite thing that people don't do as much is going to your service providers and renegotiating your service with them. So your cable company runs specials all the time for new clients, calling them up and finding out if you can take advantage of whatever that latest promo is. You might be able to save $50 to $100 just in a phone call. Doing the same thing with your cell phone bill, and the same thing with car insurance, with your insurances, because you can go to a broker that will shop your particular policy, and then you can make a decision on what's the right policy, and you might be able to save money by doing that. So again, those things I learned over time. So I just wanted to make sure that I am sharing that with you. All of these things aren't big things, but they're all things that will add up as you're trying to make sure that you are building your wealth and making sure that you're cutting down on your expenses. We talk a little bit about the power and the impact of credit. So what you see here is that what the wheel of credit score means in terms of how they grade it. So for example, if your credit score is 300 to 579, that is considered a poor score, but 16% of Americans have a credit score in this range. A fair range you could see is between 580 to 669. Again, 17% of Americans have a fair score. 21% of Americans have a score between 670 to 739. That is considered good. And then very good is between 740 and 799, which is about 25% of Americans. And then 800 to 850, and 850 is the max. is considered exceptional. And you might say, Sheila, okay, that's great, but what does that mean to me? What that means is your credit score impacts. If you go to get a car, it will escalate your car loan rate depending upon if your credit score falls into a fair or a good. It impacts your mortgage rate. So when you go for a mortgage, that mortgage is based upon your credit score. When you look to get, insurance, all of those things factor off of your credit. So again, one of the ways that you can save money and build more wealth is to make sure that you're paying attention to your credit score. And now recently, I know in banking, depending upon if you're at the officer level, we are also running an employee's credit before we make a hiring decision. So again, we don't do that at all levels, but that is something that you definitely want to make sure you're paying attention to. And you might say, Sheila, what goes into a credit score? Because again, it should not be a mystery. So there's several different components. It's your payment history. It's the amount of credit that you're using. It's how long you've had credit. It's the mix, and it's new credit. So you can see here, I won't read it out, but 40% of your payment history is on how you pay back. So any late payments, 30 days, 60 days, 90 days late, all of those factors factor into your credit score. How much credit that you're using. So for example, if you've got a bunch of credit cards, say you've got a total availability on your credit cards of $10,000, but you've used $9,999 of that 10,000 credit, that is going to impact your credit score. And you could see credit usage here makes up 23% of your credit score. So the goal is, if you have $10,000 in available credit, that you use no more than 30% of that. So that is $3,000 of the $10,000. So again, knowing that is half the battle. So that's why I wanted to share that with you. The length of time that you have your credit, the longer the time period, the better. That makes up 21% of your score. The mix on whether you have revolving and or fixed term loans, that factors into your credit score. And then the factor of, how much new credit you have in your credit portfolio makes a difference. So again, I wanted to share these insights with you so that you had this at your disposal. So again, how to build credit, how to improve your credit, consistently paying the minimum payment. It's going to take you a long period of time, but definitely make sure you're making your minimum payments at the very least. As I mentioned earlier, try not to max out your credit cards. Keep your credit balances low. I named some of the companies that you can get your free credit report on an annual basis. Many companies like Fidelity Bank, where I work, we have a solution called Credit Insights that it plugs right into. Once you opt in, it will tell you right when you sign into your online or mobile banking what your score is. And then you can also do some insights to say, if I pay this off, what will that do to my score? Or if I add more credit, what will it do to my score? So there's so many more tools today at our disposal that will help us manage to that piece. I also like to show this as an example because it's hard to understand the impact of credit in terms of how much it costs you. So for example, I'm showing you for a person that has a 650 credit score. What that does, and I did this when mortgage rates were a little bit lower. For a person with a 650 credit score, your monthly mortgage payment would be about $900 per month. But just 20 points higher, if you had a 670 credit score, your interest rate would go down a little, and then your payment would be $860 a month. So you might say, Sheila, that's not really a big difference. But when you look at the savings over the totality of the 30 years that you'll have the mortgage, it's $17,000 in terms of additional cost just based on a slight change in credit score. So again, credit definitely matters, because I'm sure the $17,000 in your pocket works a lot better than in the other institution's pocket. So again, making sure that you are paying attention to your credit and trying to get it as high as possible. You heard me mention the credit insights tool that we have at the bank. This is just one example of how you can look at your credit, but many different banks and credit unions have this solution. I just happen to love ours because it updates as often as you want, and it's a free service. When we're talking about managing your banking, I'm going to go through this quickly because I see we only have 15 minutes. Making sure that when you're selecting your checking account, understanding what are the fees associated with it. Are there debit card, point of sale fees when you go to use the ATM? You know, do they offer free online and mobile banking? Do they have direct deposit? So all of those pieces in terms of your checking account selection is really important, because what you need to know is, is there a monthly fee to maintain my account? Do I need to maintain a minimum balance? I always suggest that people do account alerts, because account alerts will tell you when your balances are low. And when your balances are low, you'll be able to make adjustments, because if your balance are low and you then have an overdraft, normally the cost of an overdraft is about $30 each time. So again, understanding that piece. And I like the account alerts for fraud monitoring, because many clients are seeing a lot more fraud on their account. So you want to make sure that those account alerts will alert you to some activity that might be unexpected. Also looking at banks or credit unions that have an early pay program. For example, Fidelity has an early pay program. So if your direct deposit comes in on a Friday, if we receive that file on a Wednesday, your funds are deposited into your account on a Wednesday. Understanding the cost when you go to an ATM and you use another bank's ATM, there's normally a fee for that. So understanding what that is. So again, all of these little pieces factor into how you can help save costs, build your wealth. Talking about savings, you heard me say earlier, save as early, as often, and as much as possible, but it does not have to be a big chunk. I just laid out here the different types of savings vehicles. In the financial services industry, we have savings accounts that separates from your checking if you wanted to allot funds for vacation, for home buying, whatever you're saving for. We've got a savings account that can help you. You can access those funds as often as you want. A money market typically has higher rates, but their access is a little bit more limited. You can write a few checks, but the access is a little bit more limited, but the rate many times is higher. Then we also offer certificates of deposit, which we call CDs. We have a lot of acronyms in financial services, but if you have a certificate of deposit, that is a guaranteed rate of interest for a set period of time. So for example, you could do I think our latest one is a 25-month CD at 4.35% with a checking account. You would then put your funds into this certificate of deposit over this 25-month period of time. You would not be able to touch that. You could, but it would incur a penalty in doing so. But what it does, which is different than a savings or a money market, that rate is guaranteed. So at the end of that 25-month term, what you're going to receive in interest and how much you're going to make off of your money. So again, the goal is to make more money on top of the money that you're already investing. And then, as I mentioned earlier, making sure that you understand your retirement plans and opening up an individual retirement account, along with your 401k or pension plan. I won't spend a ton of time on that because I know we're going to go through that a lot later on in the year. So again, what you should know, what's the best vehicle for you in terms of savings? Does it have a minimum balance requirement? Is it a fixed term where you cannot access your money as easily than a savings or a money market? I always tell folks to shop rates. Again, the power of the internet. You can go on any financial institution's websites. You can understand what their savings and certificate of deposit promos are. You can also go online. One firm is called bankrate.com. You go on their website and they'll tell you who has the best rates. Again, the power is at your fingertips. So making sure that you know what that is. And with that said, that is all that those are all my tips to help you get to where you want to be. But Fidelity, our mission really is to give you the clarity that you need to move forward in confidence. So I hope that I've done that for you this evening, and I absolutely am open to any questions that you guys may have had. Hopefully we have enough time to go through anything that might still be outstanding.
We do, Sheila. Can you hear me?
I can.
Okay, so our first question is, what are your thoughts on paying debt before saving?
Oh, that's a great question. To me, paying the debt first is going to help you build your savings. And I'll use my own personal example. If you save, but then you're still paying your debt down, sometimes it's hard to build your savings when you are still debt heavy. So my experience is to pay your debt, and then you're able to. I wouldn't do all of it on your debt, but I try to make it equally proportioned.
So you're saying the answer is to do both.
Do both, right?
Do both. So pay down your debt, but you should also be saving.
Yeah, even if it's 10, even if it's 10, 20, just save something.
Okay.
Yeah.
All right. We have another question as well, which is, what are your thoughts around, one second. What are your thoughts on credit programs like Experian Boost, etc.?
I don't know a lot about Experian Boost, but I do know that any program that's going to give you tips around how to increase your credit, I am absolutely for. I can speak to the program that we have. It's called Credit Insights. It really does give you suggestions on how to make changes that will impact your score. And I believe that is the impetus of what Experian Boost is, but I'm not as familiar with Experian Boost.
Okay, but in terms of not just the one program, in terms of your philosophy around that?
Oh, absolutely.
For credit programs?
Any credit program that will give you the tips that you need to be successful. And I think one of the examples with Experian Boost is they might suggest that you take a utility bill and see if that helps to impact your credit. I don't know a lot about it, but again, yes, I would absolutely be in favor of using any of those programs.
Okay, and there was another in the chat, but I think it was around I think someone was sharing. Okay, so the other question I have for you is, what is the difference between estate planning and a will? Awesome. Or is that all part of?
So estate planning, the difference between that and a will is an estate plan will help you actually identify and put your assets where it needs to be, because likely it goes into a trust. So a lot of times an estate plan will build upon, I'll call it the Sheila Goodwin trust. And it helps set up your assets while you're living, so that when you are no longer with us, it transitions everything into the trust and the trustees. So that's a little bit of a difference between a estate plan. It builds into a trust and it pulls it all together, where a will is just a document that does still itemize it. So it's good to have that. But the estate plan will help set it up while you're here. And then it identifies who your trustees are. It gets everything lined up, so there's no questions about where things go and what your wishes are.
Great. One final question and then we'll wrap up. What are your thoughts or suggestions on withholding for a single person with no dependent?
Talk to your tax preparer. So I'll say for me, when I was early in my career, I claimed one because I needed to have the money to pay my bills. But then I noticed I was getting money back, which was still good. And then as my career progressed, I started to owe. So my tax preparer advised that I claim zero. So I can only share that was what my tax preparer told me based upon my situation. So I would go to your tax preparer and ask, what are some of the strategies you could use to make sure that you're where you want to be. Because another strategy also is, if you're in a bracket where you start to owe, you can also ramp up. The suggestions that they gave me was you could ramp up how much you're contributing to your 401k, because it reduces your income. And so that was another strategy. Again, I'm not a tax preparer. I don't claim to be one, but that was some of the advice that my tax preparer gave me.
All right, we have one more and this will be the final one.
Okay.
What are your thoughts on multiple streams of income and the acquisition of assets which would or could equate to positive income?
Love it. Love it. And that's one of the things as you look at your skills and your passions. I absolutely encourage people, if there are businesses that you want to go into, a secondary business, even something that you could, as you retire, have something that you love to do, and then you end up transitioning into that stream of income. Absolutely. Some people have positions where they can do consulting. That's another stream of income. I absolutely am a fan of building that wealth based upon what your skill sets and what you love to do. Because I worked for 34 years, and if I didn't love what I was doing, I would be remiss. Something would be off for me. But yes, I absolutely am a fan.
Well, thank you so much, Sheila. That was really wonderful and informative. And we will make the recording available. We'll be on our Facebook or on to our YouTube channel. We'll send the links out to folks. Thank you for your time and your support. It's amazing. We really appreciate you, Sheila, and Fidelity Bank for partnering and co-sponsoring with us for this session, as well as the work on this platform, which has been incredible. I'm going to leave us tonight with my Shiro, Shirley Chisholm, who is a political and womanist icon who made history in 1968, becoming the first Black woman elected to Congress at only 43 years old. She represented New York's 12th congressional district, an office she held for 7 years. For 7 terms, I should say, from 1969 to 1983. And she became the first African-American major party candidate to run for president of the United States, and also the first woman to ever run for the Democratic Party's presidential nomination in 1972. So not too long ago, folks. So I'm going to leave you with two of her quotes. You don't make progress by standing on the sidelines, whimpering and complaining. You make progress by implementing ideas. So if you're a woman of color and you want to help us, please join us. If you're a male and not a woman of color, please join our network. There's room for you as well, where we need all the hands we can get and all the support we can get. And the last quote is, if they don't, as women of color, especially, if they don't give you a seat at the table, bring a folding chair. So with that, I thank you all for joining us this evening, and have a fabulous rest of your night. Good night.
Thank you.